With the growing acceptance of cannabis among American consumers and their elected representatives, this edgy asset class offers your portfolio an excellent source of growth. According to data from Leafly, an online marijuana marketplace, legal U.S. cannabis sales, medicinal and recreational, increased 35% in 2021 to a total of $24.5 billion. Today, we will tell you about the top 10 cannabis stocks to buy now. Number 10. Scott's Miracle-Gro. Believe it or not, one of your favorite garden supply brands is also a way to invest in cannabis. Stock's Miracle-Gro made a big splash in the medical marijuana market in late March when affiliates of the company acquired Etain Health, one of New York State's original medical marijuana producers. With the state legalizing recreational sales expected later in 2022 or early in 2023, the $247 million cash and stock acquisition gives the Ohio-based maker of lawn care and gardening products more direct participation in the cannabis industry. In addition, the company's mergers and acquisition specialist, Mark Sims, will become CEO of Etain, pushing aside its founders. Before Scott's invested in Etain, Raymond James analyst Joseph Altobello lowered his price target on SMG to $150 from $185. Altobello cut the target price by $35 because Scott's cut its 2022 growth estimates for its Hawthorne hydroponics business. It now expects Hawthorne's sales to fall by 25% this year. However, Altobello still rates Scott's a strong buy and believes shares still have 48% upside over the next 12 months. Number 9. British American Tobacco. British American Tobacco is best known for cigarette brands such as Lucky Strike, Camel, Pall Mall, Rothmans, and Dunhill. However, the UK-based company also has developed non-combustible products such as Vusa vaping products, Velo nicotine pouches, and Glow tobacco heating products. The company expects these new category products to reach 5 billion British pounds or $6.4 billion by 2025. BTI is also a global player. It currently generates 45% of its revenue from the US, 23% from Europe and North Africa, 16% from Asia and the Pacific and the Middle East, and 15% from the Americas and Sub-Saharan Africa. In the future, if the cannabis industry rises off the mat, BTI would likely up its stake in Organigram, possibly acquiring it outright. But as Coleman says, BTI is a good marijuana stock to hold if you're a value investor who likes healthy dividends. Number 8. Innovative Industrial Properties. Innovative Industrial Properties is a real estate investment trust that invests in greenhouses and industrial facilities for the medical cannabis industry. It was founded in 2016 when it had just one property under its umbrella. That expanded to 66 by the end of 2020, and it currently boasts 105. The REIT's diversified portfolio spans 19 states. 9 of them, including Illinois, California, and Pennsylvania, account for almost 90% of its 7.5 million square feet of rentable space. In April, IIPR acquired a property in Maryland with 84,000 square feet of industrial and greenhouse space for $25 million. This exemplifies the REIT's business model, the seller, Maryland Cultivation and Processing, then entered into a long-term triple net lease. It intends to use the facility for cultivating cannabis. Number 7. Altria. Marlboro parent Altria has not had a good stretch over the past few years. The stock has delivered a 5-year annualized total return, stock price and dividends, of negative 5%, which is considerably less than the positive 11.1% total return for the entire US market. On the other hand, its annualized total return over the past 52 weeks is negative 4.1%, which is much better than the negative 13.2% for the entire US market. The June 23rd news that the Food and Drug Administration banned all of Juul Labs' vape products from the US shelves certainly didn't help. However, a good portion of the stock's correction was already priced into its shares leading up to the announcement. While the Juul ban came as a surprise to analysts, the long-term pain to Altria's business shouldn't be that big a problem. The estimate is a pre-tax hit of 90 cents per share or more to write off the remainder of its investment. The company's 2022 earnings are expected to be nearly $9 billion, with 85% of its sales from tobacco. The 19 analysts covering MO stock have an average rating of hold with a median target price of $56. As for its spot among the market's top marijuana stocks, Altria owns 45% of Cronos Group, a large Canadian marijuana firm. It also has warrants to acquire an additional 10% of the company, allowing it to control Cronos in the future. These warrants expire on March 8, 2023, so there's a possibility Altria will control Cronos by this time next year. Number 6. Constellation Brands. Another indirect play among our best marijuana stocks is Constellation Brands, the purveyor of numerous beer, wine, and spirits brands. The company invested in Canopy Growth in 2017, buying a 9.9% stake for $191 million. In 2018, it upped that stake to 36.6% by plunking down another $3.9 billion into the Canadian cannabis producer. In May 2020, it exercised the warrants it received in 2017 to buy another 18.9 million shares for $173.9 million, increasing its stake to 38.6%. Constellation continues to hold warrants to exercise roughly 88.5 million shares by November 1, 2023, and nearly 51.3 million by November 1, 2026. If exercised, they would give STZ more than 50% ownership in Canopy Growth. By aligning itself with Canopy, STZ provides a fourth revenue stream that will grow exponentially with federal legalization. Number 5. Curaleaf Holdings. If you're looking for a pure-play cannabis company in the US, Massachusetts-based Curaleaf Holdings could be the way to go. The company got its start in New Jersey in 2010, developing one of the first vaporizers to administer a single measured medical marijuana dose. Curaleaf operates in 23 states, including New Jersey, Arizona, Florida, Illinois, and Massachusetts. It owns and operates 128 dispensaries and 26 cultivation sites. And Curaleaf is becoming one of the world's leading cannabis companies by using science to enhance the customer experience. Curaleaf finished 2021 with $1.2 billion in sales, which filtered down to adjusted EBITDA, or earnings before interest, taxes, depreciation, and amortization, of $298 million, 107% better than the year-ago sum. Number 4. Cresco Labs. Cresco Labs, like Curaleaf, is a multi-state operator with operations in 10 states, sporting 51 retail licenses, 21 production facilities, and 49 operational dispensaries. Its national brands include Cresco, Reserve, Remedy, and Mindy's Edibles. Just like of the larger marijuana stocks, Cresco is expanding its business through both organic and acquisitive growth. Once Columbia Care is in the fold, Cresco will be the largest multi-state operator, or MSO, with more than $1.4 billion in pro forma revenue. Number 3. Tilray. About a year ago, Tilray merged with Altria to form Canada's second largest licensed cannabis producer behind only Canopy Growth. Since then, Tilray's share have lost 70% of their value. While Tilray is the surviving moniker, in reality, Altria actually acquired Tilray in a reverse merger, with Altria CEO Irwin Simon leading the combined entity. Over the past year, he has been busy preparing the company for whatever happens at the federal level regarding adult use legalization. Despite the federal government dragging its heels on the legalization front, Simon is doing his best to position it for the future. Canaccord Genuity analysts are among the believers, upgrading Tilray stock to buy from hold in early March with a $9 target price. Number 2. Advisor Shares Pure US Cannabis ETF. The Advisor Shares Pure US Cannabis ETF launched in September 2020. This fund stands out because of its US-specific focus. It holds several multi-state operators, such as Curaleaf and Cresco, the ETF's third and fifth largest holdings, with weightings of 12.2% and 8.3% respectively. The portfolio is managed by Dan Ahrens, who has also happened to be Advisor Shares' Chief Operating Officer. Aaron's also manages two other ETFs, the Advisor Share Vice, a fund dedicated to vice investments such as alcohol, tobacco, and cannabis, and the Advisor Shares Pure Cannabis ETF, an actively managed fund that invests in both domestic and foreign cannabis stocks. Number 1. ETF MG Alternative Harvest ETF. Almost anyone who invests or is interested in the cannabis industry knows the ETF MG Alternative Harvest ETF. Launched in December 2015, MJ was the first US ETF targeting the global cannabis industry, which is expected to grow by 26.7% annually to $70.6 billion in annual revenue by 2028. Unlike MSOS, many of MJ's top 10 holdings are Canadian cannabis investments, such as Tilray, Sundial Growers, Canopy Growth, and Cronos Group. Which one of them would you like to buy? Thanks for watching.